What is up, everybody? It is the Jaden here. And today, I'm briefly reviewing my investment portfolio, kind of what I'm investing in right now and why. And I plan to do this as a series over time so that we can, as a channel, track and celebrate progress of the portfolio together. Right now, all of my investments are in a Roth IRA that I just recently moved to Robinhood from Fidelity. And as of recording this, they total about $17,700. However, I do have $11,000 in student loans that I need to pay off, so I like to kind of keep that in mind and mentally subtract it from the value of my portfolio to get a rough sense of my net worth. I don't have any other debts or too much saved up in cash right now, and my only other asset that is of real value is my 2018 Nissan Altima, which I plan to drive into the ground. So let's take a look at my actual investments. I put about 30% into the S&P 500, 30% into the S&P 500's growth stocks, 20% into US REITs. REITs are real estate investment trusts, and then I put 20% into cryptocurrencies. I consider my portfolio to be very high risk overall, mostly because of the growth stocks and especially because of the crypto. And in general, I'm okay taking on that risk right now at my age of 22 years old. As for my 30% that's invested in the S&P 500, I chose VOO as my specific ticker because it's by Vanguard and it's a basic low-fee, high-liquidity ETF. And I think that the S&P 500 will perform very well over the next few decades as a result of AI advancements and also the growth of other technologies like cryptocurrencies, smart glasses, neural interfaces, and also just the general economic optimization that has occurred over the last few hundred years. I consider the S&P 500 right now to be a relatively safe, moderate risk bet that will probably outperform bonds and non-productive assets like gold and even real estate, as long as there's no devastating wars or just massive negative shifts in American culture or America's economic positioning. As for my 30% that's in the S&P 500's growth stocks, I chose SPYG by Spider because again, it's reputable, it's low fee, and it's very liquid. And I'm basically investing in it for all of the same reasons that I'm investing in the S&P 500, but the big difference between the two is that this is higher risk, so I'll either end up getting a much higher or lower return on this money than my regular S&P 500 money, depending on how well growth stocks, which are mostly tech, perform over time. Hopefully, they will do well with the predicted rise of AI and other new technologies that I mentioned that will likely be adopted globally very quickly, much in the way that the internet, computers, and smartphones were. For my 20% that's invested in US REITs, I chose VNQ because it's the staple in the US REIT space with its low fee, high liquidity, and diversification across many different sectors. I chose to invest in American real estate specifically because it has performed well historically and because it is somewhat uncorrelated to stocks. REITs also provide consistent returns in the form of their dividends, which growth stocks usually lack altogether. And I just generally view VNQ as a lower risk part of my portfolio that'll hopefully give the portfolio more stable growth and less volatility. Lastly, I've invested 20% of my portfolio into cryptocurrencies, which I've been investing in on and off since Bitcoin was at about 15,000. Now, I wanted to invest in the top 10 or so cryptocurrencies weighted by market cap, but Robinhood actually doesn't let you invest in the currencies themselves within a Roth IRA. And currently, there's also no public ETFs that are weighted by market cap. So instead, I decided to put 80% into a stock that basically holds Bitcoin and 20% into a stock that basically holds Ethereum until such an ETF becomes available. And the reason that I'm okay with having 20% in cryptocurrencies, again, is because I'm somewhat of a young investor, and because I do genuinely believe that people's understanding, trust, and adoption of cryptocurrencies will grow over time until we eventually have a handful of cryptocurrencies that we will use on a day-to-day basis for most of our transactions. A lot of people don't believe in cryptocurrencies because it's kind of like pie in the sky and it's abstract. But when you think about the fact that most dollars today are digital, I really don't think it's that big of a step to go from a government controlled currency to one that is decentralized. And as a result of this technology hopefully growing, I believe Bitcoin and Ethereum will probably maintain very strong positions as the very first major cryptocurrencies in human history. And in the future, I do eventually want to hold more of the top 10 currencies to capture their growth, which I'm assuming will happen with time, innovation, and as our sentiments change. Now that we've covered my entire investment portfolio, I do just want to talk very briefly about my career plans because they'll kind of affect this portfolio a lot. For work, I'm currently working construction 2 days a week, and I also have a remote job where I train AI, and so far that pays pretty good. And I'm putting a lot of time and energy into creating YouTube content. I consider construction and AI training to be tools that help me to pay my bills and pay down debt, and they give me time to then create content. And creating YouTube content is something that I found I really love, and I do consider a long term investment that I would like to monetize when the time comes. And eventually, I may quit construction or AI training to either create content full time or to start a more stable career, although I don't know what field that will be in yet. For the past few years or so, as I've been in college, I thought that that field would be writing, but AI has kind of tossed that in the air and made me second guess that. So we'll just have to see. Thanks so much for stopping by, everybody. I hope this first episode of Portfolio Updates helped you in some way. And with that, I will see you guys in the next video. Have a good one.